A recession so bad that it could lead to economic collapse is on the cards, according to Ray Dalio, the super investor and founder of Bridgewater Associates. Ray Dalio is a very successful, seasoned investor and over the last week or so has been quite vocal about a few major economic risks that are currently at play, which could have absolutely catastrophic consequences on the global economy if they are not handled properly. Today I'll be taking a closer look at these warnings and how they could impact the global economy. So Ray Dalio has had a lot to say in recent days and weeks about the state of the global economy and global markets, and has issued many warnings about things that could happen in the future. So this comes off the back of the Fed announcing the next rate hike of 75 basis points last week, which was in line with expectations despite not everyone agreeing that this was the correct approach. And this does now take interest rates up to just over 3.75% right now. And Ray Dalio's first warning is that central banks need to make sure that they find a balance between raising interest rates and also keeping inflation down, and if they don't do this, then there will be negative consequences across the economy. Now, if the Fed is too cautious with raising interest rates and fail to tackle inflation quickly, or if they go too far on the other extreme and raise interest rates at a pace that is too fast, then this could be detrimental to the future of the US economy as well as the global economy. Now, US inflation is currently around 8.2%, and Ray Dalio does see interest rates needing to be raised to somewhere between 4.5% and 6% in order to bring inflation down to a more reasonable but still realistic level of around 4.5 to 5%. He also adds that a 6% interest rate is the point where things start to break pretty badly, and that somewhere between 4.5 and 6 is where we need to get to find the correct balance. So when Ray Dalio founded his hedge fund Bridgewater Associates, which manages over $150 billion worth of capital, it was the year 1975, which was a period of time that had a long run of stagflation, and having this past experience and knowledge has allowed Dalio to understand the markets more than many other people and the importance of getting things right when it comes to raising interest rates. At a New York conference for the world's best investors, entrepreneurs and executives in the finance world, Ray Dalio did come out with a stark warning on the markets and that he believes they still have further to fall. Now he does say, we're going to end up in a significant stagflation environment. Right now assets have gone down just reflecting the interest rate adjustments, but they haven't gone down yet reflecting the economic contraction, so I think there is a lot more to go. Despite this warning, it's clear that he doesn't think it's a good idea to sit totally on the sideline in cash due to how much inflation is going to erode this cash over time. And he does say, everybody thinks cash is safe because it doesn't move much. As you start to think about what the real return is, that changes. He also pointed to inflation index bonds as one interesting investment right now, though he said that timing is very important for this. And Ray Dalio also adds that at the end of the day, you have to look at an inflation hedge. And he doesn't elaborate any further on this comment. However, there are several ways that investors could hedge their money against inflation. One that is perhaps the most obvious is through precious metals and commodities, perhaps the most popular being gold, silver and oil. Now, gold and silver have historically always performed quite well during times of high inflation and are generally considered to be safe and stable investments over a long period of time. And if inflation truly is set to remain high for the foreseeable future, then the price of energy like crude oil could also be a factor behind this inflation. And we of course know that there is a global energy problem right now because of the significantly reduced supply coming out of Russia, and that Biden has been draining the oil reserves at a fast rate in order to temporarily fix this problem. But obviously he can't keep draining these reserves forever, and at some point these oil barrels will need to be bought back, which could prolong the period of time where we have high oil prices and even potentially drive oil prices up even higher further into the future. Now, this therefore makes oil an interesting option to hedge against inflation. Ray Dalio is not the first person to specifically talk about markets falling from both readjusting to higher interest rates as well as to reflect economic contraction. Now, Michael Burry and also Jeremy Grantham have also spoken about this, with Jeremy Grantham thinking that the next leg down in the markets will be driven by falling margins for companies, which will hit earnings and cause companies to have a decline in revenue and profit. So with companies earning less profit as a result of economic conditions, stock prices will obviously have to come down in order to keep PE ratios in line with what they previously were. And also on the 30th of June earlier this year, Michael Burry did tweet saying, Adjusted for inflation, 2022 first half S&P 500 is down 25 to 26% and Nasdaq is down 34 to 35%. That was multiple compression, next up earnings compression, so maybe halfway there. Now, Michael Burry clearly believes that this first drawdown was down to earnings multiples like the PE ratio compressing to be smaller than what they were before, and next up will be the stock price compression, which is needed to happen in order for these companies to remain at those PE ratios while their earnings do start to fall. Now, the S&P 500 is actually at a very similar price as it was when Michael Burry tweeted this back in June, and he stated that he believes that we are maybe halfway there in terms of an overall decline. Now, the S&P 500 is currently sitting at roughly a 20% decline from all-time highs. So Michael Burry clearly thinks that we could fall another 20% or thereabouts in the future. Ray Dalio also believes that American households and businesses could suffer a brutal credit crunch that slashes asset prices and tanks the economy. He suggests that private sector lending could dry up if the US government, who are heavily in debt, ramp up bond sales in order to finance future spending. Now, the US government may need to actually do this because fiscal spending is likely to remain much higher than the tax revenue that they are able to take in. And on top of this, if the Fed speeds up their bond sales too quickly in order to cool off the economy and tackle the sky-high inflation, then this could exacerbate the problem as the flurry of bonds being sold on the open market could crowd out the supply of private debt. Ray Dalio also adds that since the amount of bonds sold has to equal the amount bought, it seems most likely that this will happen via a big contraction in private credit, which will lead to a lot less buying of goods, services and financial assets, and hence price declines in financial assets and an economic contraction overall. And this could result in tighter credit conditions for consumers and companies, essentially making it more difficult and also more costly to take out a personal loan, business loan, or also any other type of debt as well. Now, ultimately, this could result in less spending and investing and could therefore drag down the price of stocks and other assets, pushing the economy further into a recession. Perhaps the most concerning of all the warnings that Ray Dalio has given recently is the increasing likelihood of a civil or international war. And he does believe that we are on the brink of one of these types of wars, with the different sides of the domestic and international conflicts clearly preparing for war. And if events are allowed to progress as they typically do, he believes that there is a dangerously high probability that the US ends up in at least one of these wars, if not both, within the next 3 to 8 years. Now, Ray Dalio does believe that history has shown us that things move in a big cycle, where at the end of the big cycle we end up in a civil or international war, and he does think that we are in a late stage 5 and are now approaching stage 6 of this cycle, which is the war stage. And even though this war stage has not occurred before in many people's lifetime, it certainly has occurred many times before in history, most recently in 1930 to 1945. He is noticing some concerning things this time around, including conditions deteriorating faster than he expected, the cause and effect relationships and how they progress not being understood, and that nothing much is being done in order to halt their progression. Another big problem that Ray Dalio sees is that countries like the US are approaching dangerous levels of internal conflict, primarily due to the largest wealth, values and political differences since the 1930 to 45 period. And people are fighting over just about everything nowadays, such as who gets what money, where do they get it from, how children should be taught in schools, who should win the election, and a range of other social topics. He believes that there is therefore an increasing populism of the right and of the left, and intensifying conflicts between these populists. And these populists will fight to win at all costs, and are generally not people who will work with the other side to compromise. And today's media is adding fuel to the fire, having abandoned the pursuit of truth through objective reporting, because distorted sensationalism is much more exciting and sells better. There are so many geopolitical conflicts taking place across the world right now that it's hard to keep track of what's going on with all of them. Obviously, the Russia-Ukraine conflict is perhaps the most pressing and still poses a massive risk to the entire world if things escalate to a point where there is direct conflict between NATO and Russia. Countries like the US are also still sending a lot of money over to Ukraine in order to help with their defence, which is a continued expense for the US government and is taking money away from other areas of the budget. The US's conflict with China is also starting to ramp up as well, with Xi Jinping seemingly having the most amount of power that we have seen a Chinese president have since the Chairman Mao days, and he's now serving a third term in charge and seems to have total control on what goes on in China. The semiconductor industry that China has also been targeted by the US with sanctions made against them, and this could just be the start of a series of further sanctions against China. On top of this, if China does invade Taiwan, then this could be game over for trade between the US and China, which could cause catastrophic economic damage for both countries, the US and China alike, as both do rely a lot on each other. We also have conflicts between North Korea and South Korea as well, Iran and Israel and Saudi Arabia, and then also Brazil's internal political conflict with all the protests that are taking place over there right now, and many other conflicts across the world as well. If you'd like to check out the full video that I made on China and the economic problems that they are having right now, including the collapse of their economy and stock market, then check that video out on the screen right now. I think you will certainly enjoy that. But aside from that, leave a like if you enjoyed the video, subscribe if you want to see more videos in the future, and thanks a lot for watching.